Hello, Ultimate Traders. So this is video two, is going over what happened the first week of trading. So we started the trading season for 2022 on Monday. The Nasdaq was down. It's roughly down 5%, 5 or 6% this week. It is now down 8% off the highs, the all-time highs. Now, I don't think it's just me. I think the market recognizes 10% off the all-time highs as a correction. For me, 30% is a recession, and 50% is a crash. Now, I don't believe that we're gonna see a crash. I believe that a recession is possible on the Nasdaq. So I say that because what happens is, just like I was posting all week and actually for some time, that the setup is not good for 2022. So we got rapid inflation. We printed all these dollars. We forego a lot of debt. We did unemployment stimulus. So it's coming back to hurt us. It was good when it was good and the market was flying, but now we're seeing the after effects. So in order to combat inflation, they have to raise rates. They have to raise rates. And then we got this new Omicron variant that's very contagious. It's the most contagious variant of the COVID. So we have supply chain issues. We have a lot of political turmoil between like China and the U.S. So the Chinese ADRs are getting hit. So and speculation is still high. So speculation has been coming off, but speculation is still high. So my belief, unfortunately, is that we're more than likely going to see a correction, possibly even this week. Because right now we're down 8% off the highs, and our correction comes at 10%. Now, a lot of traders like to trade stocks by using S&P. But as I said in other videos, there's a divergence. There's a divergence. I wrote about it last week with S&P and the Nasdaq, because what happens is the S&P 500, about maybe 20 stocks on the S&P 500 are really pushing up the S&P 500. So the S&P 500 was up 25% last year. But what if those stocks aren't up in 2022? Like Apple, Amazon, Google, Tesla, Nvidia, Berkshire. But Berkshire does value stocks, so they know what's going on. But what happens if they don't do those returns? If they don't do those returns, the S&P will come off. S&P will come off. Now with the Nasdaq, the same thing. You have maybe 10 or 11 companies that are 50% of the Nasdaq. So a lot of the stocks on the Nasdaq are down 50%, some 80%, some even 90%. So why would you use the SPY to tell you that, hey, I'm going to use SPY, and if SPY is positive, I'm going to buy this high flying stock. I'm going to buy the dips on this stock because SPY is up. I don't make a decision based on SPY if it's a speculative stock. Maybe you do that on a non-speculative stock, but I don't want to buy dips on something just because the Nasdaq is down a little bit. It gives you a good idea, but don't make that. Trade as you will. But for me, I won't make that decision based on SPY. If anything, I'm going to try to look at the NASDAQ and get a better indicator, but that's still not going to tell you so much because you got 10 stocks that are half of the NASDAQ. Half of the NASDAQ. Now, what happens is so we're all going to have different trading styles. We're all going to have different opinions. And unless, even on Ultimate Traders, so 2 or 3 weeks ago, someone on Ultimate Traders made a post that they want to sell cryptocurrency. I don't even know what that was. But if I'm not invited to put a comment, or someone doesn't say, what do you think about this? I'm not going to go in there. I want people to make money. I want people to share ideas. So it doesn't make sense for me to go in every single person's thread and make a comment. If I'm not invited, or it's something that other traders want to share and they believe in the stock, go ahead. We all have different strategies. Some of us want to make quick money. Some of us are saving money for a college fund. Some of us are doing this long term. Some of us are swing traders. Some are day traders. So you guys do you. But with the first week on the NASDAQ, it was a pretty bad sign. They usually say the first week is an indicator of what's going to happen for the rest of the year. If you want to use that, we're going to have a pretty bad year, unfortunately. But the way it looks right now, like I said, speculation is still high. It can get a lot worse. I could possibly see the NASDAQ going down 30%. We don't know yet, but it's possible. Why? Because rates are rising, and we're going to have a better indicator about 1 to 2 weeks. Earnings season is kicking off in about two weeks, around the third week of January. Banks, I mean, we're getting trickled earnings right now, but it's really going to kick off the third week of January, and we're going to see. So if companies are beating, it might hold off on the dive on indexes. I might hold off. But if their earnings are not that good and rates rise starting in March, we are set up for a downfall. So what we're going to have to do is we're going to have to try to pivot and change strategies. So I'm going to go over that in video 3, but this is the second video. This is what I think is going to happen with the market because of what we see going on right now. The first week, I don't really talk too much about the Dow and the S&P because we rarely trade stocks on them. We don't really trade too many stocks on the New York Stock Exchange. Majority of stocks we trade are on the NASDAQ. So that's video 2.